So in this video here, this is going to give you more so the kind of the psychology of each page. It's not necessarily a live presentation, but it's kind of getting you to understand what the tactics are and kind of what angle we're coming from for this whole presentation to make sense and help make it flow for you when you're in the house. Because agents knowing a script word for word is always a whole lot more difficult to overcome, because if you get mixed up or if you get an objection or if something happens to where it throws your script off just a hair and you don't understand the psychology of the page, it can really get you lost in knowing what to do next and being able to recover from that when you're in the house. So this is very important to understand this. I'll try to be quick with it, but we'll kind of go page by page. And what you'll be able to do is just skip to each section based on the minute and the seconds of when I start each page. So I'm going to start with the very top and just kind of give you the psychology of each page, so that way you understand the concept of where we're coming from and what the reasoning is behind it with what you're trying to accomplish when you're speaking with the client and what it does to them after you've explained in the way that you've explained it. So one of the very first things that I do when I talk with a client is we start off with the warm-up and page 1, which page 1 after the warm-up is, honestly, the warm-up should be very easy. When you get into the house or when you knock on the door, you know, it's just like the script sounds. You just say, hey, Mrs. Jones, you know, my name's Mark. I'm one of the owners here at Stonegate Financial, or I'm one of the partners here at Stonegate Financial. They either let you in right there, or you just show them your folder, you say, hey, I got some of your rates for you, I got some information for you, we had an appointment at 2 o'clock today. And, you know, you just kind of proceed to step in and let them let you in. The very first thing you're going to do when you walk in the house, you look around, look for some different items, look for some different things that you see that you can relate to or that you can ask questions about, and then talk with them about those items. Don't necessarily just get to the punch with insurance, at least let them talk. These are retired people most of the time, so they're going to want to talk to you. They're going to want to explain stories. They're going to want to tell you things that they've done, especially when you get a single retired person. Don't try to rush through things, because that's not going to help you in getting a sale, not by any means. So really just sit with them for maybe 4 or 5 minutes and just chat with them. And the very first question I ask with them, or the very first question I say, or statement that I make, is I say, well, you know, Mrs. Jones, I'm actually the owner of Stonegate Financial, and what we do is we do a ton of different products. In fact, we do regular whole life, we do term, we do annuities, college funds, health, retirement planning, will planning, final expense, and then I hold up that card that they had sent in, and I show them the card that they had filled out. I said, the card that you filled out, though, mainly had to do for folks that are looking for final expense. And I give them kind of a chicken head nod, and I say, I'm guessing that was kind of something you were looking for information, right? Oh, yeah, it was something I was looking for information on. So I go to proceed to say, you know, most people when they fill out something like that, it's usually because they've had like a funeral happen lately, or, you know, somebody had passed away, or it's just, is there anything that really triggered you to want to get information on that? And I let them kind of elaborate on that, because what they're doing is they're building up the need. That's why I ask them to the point question about a funeral or why they sent that in. If you ask that person why they sent that in, and don't let them hold it for 10, 15 minutes, because then they're going to remember that there was that Walmart card on there. Just grab it back from them. Don't let them just sit there and read everything on it. And let them kind of say, you know, is there a reason why you were looking for some type of final expense coverage, and have that be the point that you're making. And they'll usually say, you know, hey, I had somebody pass away, it was something that we were thinking about, and then that way you can really figure out why that need is there and what made them want to get some information. So that kind of helps you get your ammo for your presentation, and that helps you gear your presentation for why they need it, and then why you have the solution to provide to them to make the sale for them, and to really give them what they are needing, and to be confident in you. So that's what I, that's what I do from there, to kind of say, hey, I do many different products. Plus, it also will help you to build an extra customer down the road, whether they say, oh, annuities, or I'm interested in term life, or I'm interested in a college fund, or I have a health situation that I would like information on. It really just helps get referrals and solidify your deals as well, because if you can sell multiple products in a house, that will help you keep that client for a much longer period of time, so that way you can't have other agents coming in there trying to scramble up your deals that you have sold. So that is kind of the opening transition statement, and then when I go from there is I jump into page 2 and 3. And in page 2 or 3, it's really explaining the fact that you're a broker, and it's explaining your story to them, who you are, and why you brought yourself to the door of speaking to them about insurance. And the very first thing I say, Mrs. Jones, what I'm actually a financial broker. I have over 50 different companies that we represent. And I'm sure you're familiar with some of these companies on here. But before I had all of these companies, and then what I say is I get into my story. And that's what I strongly recommend, is that you get into your story here on this part, and you help them learn a little bit about you. If you can tell them the story about you, you're building an incredible amount of rapport, you're building credibility, and you're building really honesty in why you're passionate about what you do. And those are the key things, is you want them to know that you're passionate about what you do, and that you're going to honestly put them in a very good position, and that they can have confidence in you, and that you're not trying to just sell them a product. So my story, in which you can most definitely use if you want to use it, is I say, before I ever even got into insurance, Mrs. Jones, I used to actually sell home improvements, which I absolutely hated, because I was selling high-priced home improvements, high-priced doors, windows, and they were great products, but at the end of the day, it wasn't necessarily something that somebody needed. I mean, they were kind of looking around, but they didn't really need the siding. They didn't really need, if the roof's leaking, it was bad, but I was selling them high-priced stuff and putting them in a significant amount of debt, and it just didn't sit easy with me. I love talking with people. I love working with people. I love solving some of their issues and putting them in a good spot, but I wasn't doing that with all of them because of the products that I was offering. And so I had a buddy of mine tell me about insurance. He said, hey, you should check this out. You're not putting people in debt. You're actually giving people, a good product for them that puts them in a better financial state. And so I actually worked with a company called Lincoln Heritage. I don't know if you've ever heard of them, but I worked with them for a couple of years. But that was a huge learning curve when I first got into insurance. And for one, that learning curve is I didn't know anything about insurance. Insurance is confusing. Insurance is hard to sometimes even understand with what companies even work for you. Because when I got into Lincoln Heritage, I learned that there was 50 to 100 different companies out there all trying to sell you the same product, but different products. And they all have their analogies and their names for things that mean this or that. And it's all just kind of a gimmick to try to get you to buy into what they have and not be able to compare with different companies. So after I stayed with Lincoln for a little bit, I learned I was kind of in the same situation. I was just selling folks one product, and it wasn't always the best fit for them. So this is actually why I opened up Stonegate, or this is why I partnered with Stonegate Financial, is because I wanted to be able to set people up in the best possible position that I could put them in. And it was a win-win situation, because all of this is voluntary. You can pay it as much as you want, or you can pay it as little as you want, and you can cancel it any time. And I'm not about to put somebody in a bad position, because that's a lose-lose situation for when they find out they didn't really have a good deal, or they really weren't set up with the best company. So this is why now we represent a little over 50 different companies, and I'm actually a financial broker, which is really good for you, because no matter what your circumstance might be with your health or your age, I'll be able to help you in finding out which company is really the best fit for you based on just a couple questions I'll ask you. And that's really my job, is to find you the lowest possible rate for the most amount of coverage that fits within your budget. And this will really go to show you that just one company out there isn't necessarily the best company. So I go to explain that just like that every time when I'm in the house in page 2 and 3. And that's all I do, is I give them my story. I tell them I'm a financial broker. I build credibility with the different companies that they see. I might ask them, hey, have you heard some of these different companies? And I really go from there, saying that that's my mission, is to really find their sweet spot and find what company is the best fit for them based on their age and their health. And some of the things that you can use to complement your storytelling and complement your presentation skills using metaphors and similes, where you can use things like car insurance metaphors, you can use things like health insurance metaphors, things that make sense to the client, or things that maybe you can relate to in the rapport building, where you can use a simile or a metaphor and say, hey, it's kind of like car insurance. If you have an awesome driving record, you wouldn't want to be lumped in with somebody that has a bunch of OBIs. I mean, you're going to be paying through the roof when you don't need to be. So that's why it's my job to try to find what company fits best for you. So that's mainly what I do to get my point across on 2 and 3, is tell my story, tell why I'm passionate about what I do and why it's important about what I do, and then explain to the fact that I'm a financial broker. Because when I explain that, and I explain the fact that I have multiple different companies and I'm trying to find what company fits best for them, psychologically, and you're really relaying to them and letting them know that you can kind of sit on the same side of the table with them and say, hey, let's work together to find what company fits best for you, instead of you sitting on the opposite end of the table with them trying to sell them one company that's not necessarily the best, leaving them to think they should shop rates or they should shop different companies, and because everybody says their company's the best. So instead of doing that, it's a much better philosophy to work together with them to try to find out which company is really the best one for them and give them really an unbiased answer on it. So that's the way that you want to do it with pages 2 and 3. So on to pages 4 and 5, which is things to know and your funeral costs. This is where you have both of those pages out. And I kind of laugh with this one because I've heard it a million times. I mean, they're seniors, especially if they're anywhere past 55. Well, if they're anywhere of the ages of 60 years or older, or even in that close age range, the older they are, the more they've heard this. So you got to kind of do it with a chuckle. It is important. But I say, hey, Mrs. Jones, you probably know that Social Security only pays like $255 for a death benefit. And they say, oh, yeah. And I'm like, I kind of chicken head nod them. I say, yeah. And that's even if you qualify. It's kind of a drop in the bucket when after someone passes, your Social Security can be cut by as much as half when you've already faced with a fixed income. And then from there, when I'm on this page, I say, so do you have any idea kind of how much an average funeral would even cost if you had to guess? The reason I ask that is because you're able to get them to get an idea of how much a funeral would even cost them. What are they up against? If they pass away, do they have $10,000? Do they have $15,000? Do they think it's a mountain that they have to pay for? Or do they think it's a molehill? You really need to gauge where they're at with how much they feel like that this is needed. So it really helps for them to elaborate on that and for them to give you a good guess on how much they think a funeral would cost. Especially if they say $15,000 to $20,000, that usually means somebody got robbed by a funeral director in a funeral home and got shanked on price, and you're there to kind of explain to them, like, this is why you need somebody like yourself to help kind of guide them, so that way they don't have to overpay for a funeral by getting an exorbitant amount of coverage when they don't necessarily need that much coverage. This is, again, it's also a great way to build rapport and trust, because it shows that you're not headhunting, you're not literally looking for unnecessary coverage, and it's repeating the fact that you're keeping their budget in mind, that they feel like they can somewhat afford this. So from there, I kind of flip over to this page here, to page 5, and I kind of joke when I say, some of my customers, John, they just say that they want to be burned out back, when they have a funeral done, and they say they really don't want anything to be covered. I've actually heard some pretty ridiculous stories of what people have wanted to be done to them to try to save money, instead of paying $10,000 for a funeral. But unfortunately, some of it's either inhumane or literally not legal to do, because you can't burn bodies in the backyard. I think you would have more than the FBI or your local police probably giving you a call because of that. So, do you kind of have a preference between, I can't ask you this, do you kind of have a preference between burial or cremation? And the only reason I ask, we don't have to go into much detail about it, but it's just to try to figure out how much coverage you need, because really the cost of the two is so significantly different. I don't want to give you more coverage than you need. And so from there, you can really help them figure out which route they want to go. Another way to do that is you can ask them and you can say, hey, do you have a good idea with what you're looking for? Do you have a good idea with how much coverage you want, or do you want me to help you walk you through it? And then you just go from there, and you let them kind of decide between the yellow box or the green box. And now when I jump into page 6 and 7, this is when you can do your upsell. You can sell them for more money, you can sell them for more coverage, you can let them think about other needs that they may have. This is where you ask that, just last question is, do you have any debts, or do you have any insurance-like stuff that you can think of that you wouldn't want to leave behind or mishandled, like mortgage loans, car payments, personal loans, medical bills, retirement savings? Is there anything like that that you've got that you want to try to make sure is either handled correctly or you don't want passed down to your loved ones? Like I said, credit card bills, personal loans. This right here is how you slam a much higher deal, where you not only have just final expense that you sold them, but you sold them a final expense insurance policy, but it has enough coverage to not only cover the final expense costs, but to also coverage these extra debts that they may have had that they don't want to really leave behind. And how you really build the need on this is you've added up all these debts that they have, and then you ask them with pages 6 and 7, which complement each other, you say, well, Mrs. Jones, let me ask you, once you've added up, $10,000 for a final expense, or if it's only $10,000, it's just final expense, it's fine too, you do the same thing. But say it's, once you've added all this up and it's, so Mrs. Jones, it looks like you'd be shooting for around $17,000 is what you'd be looking for to have coverage on for, all these things. So have you really saved any money towards the $17,000? And you literally don't say anything. You just let them say either yes or no. And you kind of laugh with them, but then you kind of let the burden off of them by laughing and saying, most of our clients really have saved little to zero money anyways. So you're really either ahead of the game if you saved a little bit, or really there's no worries, because life insurance can provide that instant savings that you need for much less than you think. Plus, you don't have to waste all your time trying to save up your pennies just to be able to cover the $17,000 bill that you need to try to make sure is not passed down to your kids. And I'll show you how to prevent from passing that down for a much more affordable amount than you think. And here's how it looks. And this is where I go to page 8. And page 8 is actually a really interesting, and it's a really good factual piece of information to show them, and to show them their two options. Because their first option is they don't get any insurance at all, and they just let their family handle it, and then they're a complete irresponsible, unmentionable words that I would say type of person to just let their bills just be passed down to the next Joe that's in their family. It's a horrible concept, and they should feel bad if they don't get anything for it. But the other option is that they either save it up on their own or they use an insurance policy. And this shows you the huge difference between how much it would cost for them to save it up on their own versus just getting an insurance policy and having it all taken care of immediately. It is the way better alternative, exponentially better, than them just saving it up on their own. And here's how you show them that breakdown, is you say, how does your savings plan look? So when I explain this, this is a lady who I had sold a policy to with Mutual of Omaha a while back. She was 62 years old. She had 5 kids, and she wanted each one of her kids to have $5,000. So I explained this to the client. I say, Mrs. Jones, this lady was 62 years old. This is a perfect situation with what her ultimatums were and what her plan was and which way and how she went about to take care of this. So she was 62 years old. She was on a fixed income. She had 5 kids, and she wants $25,000. And she does not know how to save up for that. So here's one option. One option is she could save for it in the bank or with her retirement funds of saving up $25,000, which she's living on, and those retirement funds are slowly dwindling anyways. They're not increasing by any means. Or she could get a insurance or a final expense policy to have it taken care of. Now, if she did it on her own, and I usually write this stuff down. I show them on a piece of paper. I just write down if she were to save $25,000 and she were to save it over a 10-year period. If you divide that $25,000 over 10 years, that's around $200 a month. She would literally have to save like $208 a month every month for the next 10 years for that to finally hit $25,000, because the bank's not giving you any interest anyways. I think it's like 0.03%, and they're even introducing negative interest rates here in the future. They're actually entertaining that. So really putting your money in the bank isn't really any good anymore like it was. And they usually agree with you on that and chuckle and laugh about it. And you see, that's her one option. And on a fixed income, saving over $200 a month is a little difficult. Or her other option, which is the route that she went with, is I set her up with this Mutual of Omaha policy, and we got her $25,000 in coverage. Now, instead of her paying $200 a month, she pays around $1,000 a year. Actually, she pays that monthly, and it only equates out to around $80 a month. So for the same thing, instead of her paying $200 a month, she's only paying $80, and she has the same thing. Actually, it's way better, because right now, at her paying $80 a month, she got same-day coverage to where that $25,000 is instantly there for her family if she needs it, if she were to pass away. So she instantly has that money. That money is instantly saved up for her, and she doesn't have to worry about waiting 10 years to get it because she has that very same-day coverage. And at paying $80 a month over the course of 12 months, that adds up to around $1,000 a year. So she pays around $1,000 a year every year to have this $25,000 in coverage. Now, if you save up $1,000 a year, after 10 years, you're only going to have saved $10,000 when she needs $25,000. So she's way ahead of the game. But what's great about this is being on a fixed income and paying $80 a month, that stays the same for her whole entire life. That never goes up. It never changes. If it's affordable to her now, it stays the same. It works with her fixed income. And as you can see here, if you look at the $1,051 all the way down, it will always stay the same. Now on this column here, this is her accumulated premiums. So if she pays $1,000 a year, after 5 years she pays $5,000. Now here's the situation if she were to pass away in 5 years. Well, if she passed away in the first year, she'd have only put $1,000 in, and she'd have gotten $25,000 back. Her family would have. And they would have been set and taken care of, and she'd have only paid $1,000. Now, after 5 years, she'd have only put $5,000 in. Now, she still has $25,000, but here's the great thing about this, is instead of putting your money into the bank, you actually have a little bit of cash value that accumulates with her policy. Now, with her after just 5 years, she already has around $1,900 in interest that she has accumulated based on just her paying $1,000 a year. So with her only putting $5,000 into the policy, she has $27,000 that will come back. So let's look at year 10. Year 10, she's only put $10,000 into the policy, and then she has $25,000 here, plus an additional $5,000 on top of that. So that's $30,000. And even in 20 years, she's only saved $21,000 out of her $25,000, but yet she has $37,000 that she'd receive back. So you can see how that's a benefit for her and much cheaper for her than saving it up basically on her own. And that's how these policies work, and that's how they're beneficial to the clients. And then you just mentioned the recap, and you say, hey, so just to recap, and you basically read the recap page to them and say, hey, you know, the great thing about this is it's permanent coverage with whole life protection. Your benefits, like I said, are never going to decrease on you. Your premiums are never going to increase. Your policy can't be canceled because of your age or any health changes. Final expense policies are one of the most cut and dry, simple policies that you can get that are more conservative for folks that are looking to just be covered and taken care of so they don't have to worry about that burden being passed down to their family members. Which, if you chicken head them with that, you say, Mrs. Jones, that's pretty much what you're looking for, right? Plus, you can be protected from the very first day your policy goes into effect. And there's not really any medical exam, anything like that required. I'll just ask you a couple health questions really to figure out your best rate. And then if you do have couples, you may ask them, do you guys pay your bills together? Do you guys pay your bills separately? That way you can give the prices in their lingo. If they pay their bills together, say, hey, how's $120 a month for the both of you? Is that affordable? Is that outrageous? Or say, hey, or if they do it individually, you say, hey, how's $40 a month for each of you? That way you can speak their language in giving them prices. So when you say, how does X to X sound monthly, which this is where you're getting into this final page here, which is your page 10, I believe, or your last page. When you get into this final page here, you're trying to figure out what is an affordable monthly budget. And the way that you ask that is you say, hey, how does X to X sound monthly? Is that affordable? Is that outrageous? And you can really kind of test the waters. What I do every time, this has increased my sales drastically, this has increased my average premiums drastically, is I just make that number larger. I used to say when I first got into insurance, I used to say, hey, how does $20 to $30 a month sound? How does $30 to $40 a month sound? And they say, yeah, it sounds great. The worst thing that you can do is leave money on the table in that situation. I don't care how much coverage that they said they wanted. I don't care if their premium comes out to $10 a month for the coverage that they needed. Always say, okay, well, I gave you the scenario with this lady here, so to kind of start from what she paid, how does $80 to $100 a month? Does that sound affordable? Does that sound outrageous? If they say it sounds outrageous, then just drop it down. Say, okay, well, what's a little bit better? Is $60 to $70 a month? Would that be a little bit better? Let them work you down to what's comfortable, and then make sure that's comfortable for them. And because they're going to be paying a policy that they can cancel at any time, so you don't want them to be kicking or calling you at the end of the month upset, for making their payments. And that's exactly what I say. Once you get to, hey, how does $50 to $60 a month sound? And they say, okay, well, that sounds a little bit more affordable. I say, you're not going to be kicking me at the end of the month or calling me up, screaming at me, because that's not affordable, are you? And they'll say, no, I won't be doing that. You say, okay, good. I just want to make sure because I can make that whatever amount really that you want. That way it fits your budget well. And then from there, you're going to start with this middle column. If they do have an old policy, you're going to fill out, the face amount, the premium that they're paying, any extra notes here that you want to add on it, and maybe the fact that they had accidental coverage as well. And you're going to show that that's the old policy there if they're considering replacing it. And you're going to show them these new policies. So when you show them this compare the rate sheet, this is very important in breaking down with them that you're shopping different companies and you're really trying to find that best rate for them, so that way they feel confident in the price they got, they feel confident in the product that they got. So when you do $50 to $60 a month, you can do this multiple ways. You can use these gray title marks. You can put the premium amount. You can put $50 or $80, or you can put the coverage amount. Put $10,000, $15,000. I usually do $80. I'll do the premium amount at the top, and then we'll see which company gives the most face amount, and that's usually the one I go with. Now, with some companies that, like I got guaranteed issue ones here they're high prices anyways. They're through the roof almost 9 times out of 10. Unless it's a good fit, which that would be Great Western then. But I usually put a line through those. And I just tell them why. I say, hey, this company's good for this. This company's good for that. This is this situation. This is that. And then that way it shows that I have those companies, but then it helps expedite kind of the situation. But if you do have somebody that's a shopper, maybe it's better to give them more companies to make them feel very confident that you're shopping the crap out of them and that there's not another company that's even out there. So that's what I do is we'll start off with Royal Neighbors and Foresters, $50 a month. This gets them 8,000, this gets them 9,000. And then we'll kind of go from there with, hey, let's figure out which company fits best for you. And before I even go through that, I ask them kind of, hey, which companies are they familiar with? And they'll mark them off. I'll star which companies they're familiar with. And then once I fill all this stuff out, and you got $50 a month there, and they start to figure out a range, they see 8,000, 9,000. I say, hey, is that around the range that you're looking for? And if they say that's a go, then I'll go ahead and I'll finish this column out, and then we'll try to find which one's the best, and I'll go through it with them. I'll go through with them how much each coverage has. This one's good for this one's good for that. That's because this one's this price because of this. And then I'll give them confidence in saying, hey, let's go ahead and let's go with Rural Neighbors. They're really good for this, or they're nonprofit, or Foresters, same situation. And then I kind of guide them into that company and give them the reasons why to go with that company. And then you go from there. And then I basically say, so which one works best for you? And then I might say, hey, so the Foresters, and kind of shake my head, or the Royal Neighbors, that wouldn't sound good for you. That's a good price range for you. Okay, great. The very next question that you do, which is your closing tactics, a couple different ways, is, like I said, which one works best for you. And the very next, a very subtle way to close, is you just go right into the app and you ask them the easiest question ever, which is, so who would you want your beneficiary to be? Or you can say, hey, is there a better place to write this, on the table, in the kitchen? Would that work better for you? Or you say, hey, would you like to show you more rates, or does this work for you? And those usually work the best in order to get that sale moving. I usually ask, so who would you want your beneficiary to be? So I start filling out the beneficiary stuff. Then I go into their basic information. Okay, what's your name? What's your last name? And then from there, I get their social. And I do not act like the social isn't a big deal. I don't know why people even think it's a big deal, because it's not. It's an old thing of the past for people to be uncomfortable giving their social. You have to give your social out because literally you're giving them thousands of dollars in case they were to pass away. There has to be some type of accountability. You can't have money laundering. There's so many reasons that you can explain why you need their social, because for one of the worst things that happen, one of the most prevalent things that happen in the insurance industry is fraud and money laundering, and you literally have to take money laundering courses on it, and you need to verify their identity and who they are. You can't just have somebody's false identity. And for two, people who say that they're healthier than they are, or that say, they're a different situation than what they have, you have to be able to verify that through the MIB, the Medical Information Bureau. Those are all great things to be able to explain, and huge, awesome points to be able to make if they ever gave you a fuss about needing or giving you a social, which I can't remember the last time somebody has given me a fuss about it, because it's one of the first things I ask. I say, hey, so what's your social? You get their basic information, you go from there, you got their beneficiary, basic info, and then I said, okay, great. The next thing I need just to get you covered today is they usually just ask for a voided check. That's usually the easiest way to do it. And then I just pick up that sheet on the application, and I just show them where it shows to have a voided check. And then they usually either grab the check, or they say, oh, I don't have any money today. Then that's when I say, well, you're on a fixed income, right? Is there a day that you're known when you usually get paid, or when the next day that would work best for you? And that's when I let them say, oh, well, the 3rd, or oh, well, next month, and then we go from there. And then that's when I say, okay, well, that's actually fine if you want to just set this up, and then we won't have it come out until the 3rd of the following month, or we won't have it come out until the 15th. And then do you just want it to come out on the 15th of each month? And that's how you set up and get that application running. And the last few things before really going over that is you want to use your cheat sheet that I had you download and had you fill out, because that cheat sheet when you ask them those health questions before you go through and you give them those rates, you learn a little bit about them. You learn, have they had the heart attacks? Have they had a stroke? Have they had, different key health issues that gives you the proper rate ranges to give them before you give them the prices. So that's basically, how I go through the whole presentation in the house. That's the psychology of the presentation, and that's really the easiest way that this works as far as getting your sales and having a smooth transaction to really make your client feel confident when you leave the house. The last thing you do before you leave is I do not rush out of the house. I sit and talk with them for a little bit, chat with them. I just show that I'm not ready to just grab a sale and run out. You really want to show them that you care, that you put them in a good position, and kind of just read them and make sure they feel confident about the situation, because when you do leave the house, if you have even the slightest feeling that they're going to cancel, I can almost guarantee they're going to cancel. So here's the best thing to do. Even if you're the most inexperienced rep, it is much better for them to get that objection out on the table while you're there than you to rush out of the house, them have that objection, and then you're not there to be able to explain it. It's one of the best things to just wait in the house and to make sure that they feel 100% confident and don't be scared of the objection if they have one, because you want to be able to say, hey, I don't have to turn this app in. I don't have to, I don't have to get this done. Is there something holding you back? I've been doing this a long time. And you can almost pull that out of them sometimes and then overcome it, and then they feel even more confident. And it could be something as simple as them saying, well, I don't think I can get approved. And then you can overcome that, and they'll feel better about it when you leave the house. So if you have any questions, just give me a call. My number is 937-203-5656. I'd be happy to go over any part of this presentation with you to make it a little bit easier for you in order to understand it.